I'm Tabitha Rock.
And I'm Sam Davenport.
Born and bred in Melbourne, we live and breathe property, and we know the Melbourne market like the back of our hand. We've both been buying and selling real estate in Metro Melbourne for over 2 decades combined, and we've learned a few lessons along the way. Okay, we are back, and we've got a very special guest.
That might be overstating.
No, very special. Will Unkles from 4040 Finance. Thanks for coming on.
Thanks for having me.
Thanks for coming in, Will.
That's awesome.
I would almost say our favourite guest.
No, I don't.
I want to say that. I want to put it out there.
That's at risk of offending previous and future guests.
I know.
Yeah.
Which she doesn't mind doing.
No.
I'm cool with that.
I
Because
feel like you
you're
might
in the
say
room
that
with
to every
me.
guest.
Yeah, she probably does say that to every guest, to be honest. I have no favourites, but
Good.
I think you're fabulous.
Thank you.
You've run a very successful mortgage broking business for 8 years now, is
Yep.
it? And you're the money man. When you want money.
Yeah, I get the thing that people don't want, debt.
Yeah.
Yeah, but this is good debt. Or do you do car loans?
No, we do car loans, but not many.
Okay, because that's bad debt.
Yeah.
But you do the good kind of debt, the home loan debt.
Yeah, we help achieve your dream, but we get you the thing that no one really wants,
Yeah,
which is debt.
Mortgage,
So it's a weird thing.
marriage to the bank.
A marriage to the bank, yeah. It's a weird thing to be selling or getting people signed up for, but it does enable lifestyle and purchases and homes.
Wealth
and
creation.
Wealth creation, all that stuff. So, yes, it's good debt is good debt.
Yeah, love it. Well, we're very excited to have you on. We've got lots of questions for you. And I think, first of all, we should start with I think a lot of people just naturally go to their bank when they want to check out how much they can borrow and, I'm thinking about buying a house and, I bank with Westpac, let's just give them a buzz.
For sure.
So why would people go to a mortgage broker over doing that? Or should the first step be going to the bank and then you're sort of you vet the bank and make sure that they're actually giving the person the right rate? What's the difference?
Good question. The first thing I'd say is when people call us, they always ask, I don't know if it's too early to speak to you. And I say to everyone, we want to speak to you 3 months before you think you should speak to us. So the earlier you speak to a broker, the better it is. Even if you're not looking at buying for 2 years, go and talk to a broker because you can learn all the stuff to put you in a position to go and buy. Why would you go to a broker? Brokers are licensed with multiple lenders. So for me and most brokers, there's between anywhere 40 to 60 lenders. So the odds of you going to your own bank and getting it right the first time, the bank that has the right policy that will lend you the right amount of money, the cheapest interest rate, and the right solution for what you're trying to buy, suburb, whatever it is, investment, owner-occ, versus going to a broker and getting all banks on the table and all options available to you, you just get a customized solution from one spot as opposed to effectively needing to knock on 40 different bank doors to find out what they've got to offer.
Yeah.
So choice is the biggest reason you go to a broker. And now, Australia-wide, 70% of all home loans are written by mortgage brokers
Wow, that's amazing.
outside of banks.
That's
and
interesting.
it's interesting. There's positives and negatives. The positive of that is something called the net interest margin, which is the margin banks make on each loan they write. That's the lowest it's ever been in history.
Yeah.
And that's because of increased competition. A bank knows that if they're not offering the best rate, generally there's a broker behind the scenes that goes, that's all right, we'll go somewhere else. So banks are fighting harder and giving up more margin to keep clients, and that's as a result of broker involvement in the process. The downside is, as we're saying, a lot of branches are closing.
Yeah.
So how do you keep branches alive if all they're there for is, I need to get $200 out to pay a tradie or whatever? What are you actually using a branch for these days?
Yeah.
When banking's moving more and more digital.
I don't know. When I go into my branch sometimes to do, deposit, of course.
What are you side hustling, girl?
Oh, just sometimes I sell some things. No, but when I go in, you can't speak to someone in the branch. There's just seems to be so many bodies in there. But is that because they're sort of there are fewer branches now, and so therefore there's more, and it's often it's a certain demographic in a branch.
That's right. Yeah, and that's the same. Generational change. When I say to people, I've got these bank options and this is great because it's got a branch, the first response is, that doesn't mean anything to me.
Yeah.
So it depends on the demographic, right? Whereas if we're doing a loan for someone, 50 plus, they're quite used to a branch network and like the security, they can walk in and get a transaction done.
Yeah.
So, and that's why, again, customized solutions, the cheapest rate is important, but it's not always the one thing that matters to a client. So that's where brokers help.
I feel like what would be the reluctancy to use a broker? I feel like would some people get the feeling that they, have to move all their banking to whichever bank is selected and so by them or recommended by the mortgage broker, and then they're like, "Oh, I'm just comfortable with CommBank. I've used them for 30 years, and now you're going to tell me to go to Macquarie, and now I have to change." Or is that why a lot of people just go to their existing bank?
Yeah, I think it's just ease, right? And when your existing bank has all your data in front of them, which can be a positive or a negative depending on your situation.
Exactly.
It's quite odd. Sometimes going to not your bank is a better option than going to your bank because of some things that might be in your transaction histories or something. So it's very odd. But yeah, the bank that you've worked with forever, it's a natural thing to go, I want to get a home loan, I'll just go to the bank. That's my bank. Why would I look elsewhere?
Yeah.
But I think the rise of the internet, the rise of 70% of loans being done by brokers, when family and friends start looking for property, generally they're talking to someone that's used a broker and they say, oh, you should do it this way.
Yeah.
So yeah, I mean, I'm in the seat. I'm going to encourage everyone to use a broker. I don't see much benefit in going direct, but there are probably 3 or 4 cases a year where we do say to clients, hey, you're going to get a better experience direct, so I'll stay out of this one. You should go back to your bank for X, Y, and Z. But they're for pretty peculiar cases.
Yeah. So in the scenario where you are speaking to people early in their process, so they're sort of, as you said, like 3 months before they think they even want to engage with getting a loan, that's when you want to speak to them. What sort of wisdom are you imparting on those people to prepare themselves, to put them in a really good position to get the best possible loan they can?
Yeah, good question. It feels like the worst first date because it's like, hey, lovely to meet you. You're so nice. You're so nice. How much do you earn? How much cash have you got? How do you earn your money? Is there any commission element? Do you earn bonuses? How long have you been in that job? It's like the worst first date ever.
How often do you eat out?
Yeah.
What's your Uber Eats
What's your Uber Eats
account?
order?
Are you pregnant?
Yes.
Have you recently lost a baby?
Yes.
You're like, oh God.
And people get the sense that they need to present to a broker in a certain way.
Yes.
Probably a bad analogy, but a defense lawyer, someone that's going to fight for you in court, might know more than what they let on in court.
Right.
And a broker does the same. We want to know your full story, and then we will customize a solution
Based
to
on
the
that.
banks that have the right policy that enable your story to be absolutely fine with that bank. And it could be the way that you've saved your money. It might be that mum and dad popped cash into your account 3 months ago versus mum and dad popped cash in your account yesterday. That can change lender, just that little difference, right? So there's lots of different things that go into it. But the wisdom is, we've already spoken about good debts and bad debts. Borrowing power is the biggest challenge at the moment. So the ability for your income to stretch to borrow enough to do what you want it to do. So any debts you've got outside of any home loans, which generally if you're a first home buyer, you've got hopefully not much, car loans, HECS debt, credit card debt, payday lenders, personal loans, they are terribly impactful on your borrowing power.
Really?
So, if you can come 2 years early, we focus on paying off those debts as much as we can, getting them down as low as we can so that we can increase your borrowing power. So, example, yesterday had a client, they're a doctor, so they've got a $50,000 HECS debt still, which in that world is not abnormal. They earn really good money, $160,000. They're working really hard. They've just bought a place. With the HECS debt, we can borrow about $600. If we drop the HECS debt, that number goes up above $70,000. So we're actually going to use her cash to pay off the HECS. So we use $50,000 to pay it back.
Yeah.
But then that allows us to borrow $100,000. So we've actually increased her price point by getting rid of that debt. So it's all little, when you say wisdom, it's little tips and tricks to enable you to get into the position you want to get into.
Yeah. What about even, because we deal with oftentimes a lot of, and in the Melbourne market, obviously with the values of property the way that they are, a lot of first home buyers do get help from the bank of mum and dad initially to get them started. Then they get some level of a loan for themselves. So in that scenario whereby they're being gifted maybe the deposit or maybe 20% deposit or who knows what that figure might be, often it's around something like that. Are they still, so they received that money, are they still needing to prove that they have the ability to save money?
No.
Okay.
Short answer, no. Yeah. So it's all technical with different banks, but no, they don't. So if you have a 5% or 10% deposit, with most banks, they want to see that you've been able to save that yourself. And even in saying that, that's a weird thing to say. It's actually what they want to see. is that you've held the money for 3 months.
Right.
They don't need to go back, I started saving when I was 16, and you don't need to show 20 years of receipts.
Right.
They want to see that it's been in your account for 3 months and you haven't spent it, because that shows character, that you are not going to be wayward with your money and you can keep it in your account. So that genuine savings is the policy that we're talking about, is just the ability to show the bank that you genuinely had money at your disposal for a period of time and I didn't spend it. They go, cool, you can be trusted.
Yeah.
Now, when you have a 20% deposit, or with plenty of banks at the 10% deposit mark, the genuine savings policy or the need to prove that disappears.
Really?
So literally, mum and dad can say, here's your 10% deposit, and the next day we go get a loan.
Amazing.
Yeah, so again,
So for
lender
all
by
you
lender.
trust fund babies out there,
Seriously.
go and speak to your broker.
And I'll
You'll
give
be right.
here we go. In the last 12 months, we've had gifts anywhere from $5,000. I'll give you our biggest, 1.8.
Oh, Jesus
You're
Christ.
joking.
No.
Tell me what their purchase price was.
No,
Well-
tell me where what is the house the parents live in? Is it a
I
mansion?
actually don't know that. Yeah.
Damn
Well, you would assume so, right?
Yeah.
But a huge gift, and the parents were very well off, but lovely people, and the daughter was lovely. This will make a lot of people trying to get into the property market sick, knowing that stuff does happen out
It
there.
does, yeah.
And is very abnormal. That's definitely the biggest I've ever
The
seen.
outlier.
Yeah.
Some huge outlier. And the daughter, who's lovely, and the dad wanted to teach her about debt and taking on responsibility and all that, she borrowed the stamp duty. So her debt remaining was the stamp duty.
Yeah. That's
Yeah.
Oh,
Good on you.
Good. That's good.
bit gel, but good on you.
Yeah, good luck
I'm happy
to
for her. She sounds good.
Well, I'm sure she's not
gosh.
renting. Probably
She's out of the rental market
Yeah, she's
now.
out of the
Yeah.
rental market. But for those renting, I have a lot of people say, when everyone wants to chat property with us, so I'm just renting. I don't save all that much, but I'm just never going to get into the property market. But I and I don't know too much about it, and you can help explain. How does the banks view that rental money? Like, can that show them that they can pay off a mortgage?
Absolutely, yeah. So when you're renting, the genuine savings thing we spoke about, where you've got to prove that you can put money aside, the rent you've been paying can be used in that calculation. So a bank will say, hey, we can see you've consistently paid $2,500 a month for X period of time. That totals $35,000. You clear that hurdle of needing to prove that you are good with money. Because paying your rent on time is pretty much the same as paying a mortgage on time.
Yeah.
So the banks really do look at that as good determination
Yeah.
to show that you are trusted and good with your money.
So is one of the documents that you ask people to provide a rental ledger?
Sometimes or
okay.
or a letter from your rental agent, which rental agents are pretty good at providing them. They've probably got templates. They get asked for them so often.
Yeah.
But again, it depends at what deposit level you're at.
Yeah.
If you're at a 10 or definitely 20% deposit level, we wouldn't even bother with that. It's not part of the story.
Yeah.
But if we need to be at a less deposit level than that and prove that the client's got good history at being able to manage their money, then a rental ledger can help with that.
Yeah. Because obviously in getting the home loan, particularly if they're an owner-occupier, they're eliminating their rental cost anyway.
Yeah,
so
it
it's like-
disappears.
yeah, it
and
disappears.
so in every home loan application, you're looking at future state. So they go, well, that rent cost disappears, and so we can use that money towards paying the mortgage. So they're always looking at the future state. What can some quirks that sort of also hurt you is when you buy. Generally, that first home buyer is buying into a body corporate, and that has a monthly cost attached to it.
Yeah.
Your body corporate fees and things like that. Your rates. In the future state that we've got to look at on a bank application, we've also got to kind of guesstimate them. And so you guesstimate and you get a borrowing power, but then if they end up buying to a place that has excess elevators, gyms,
Yeah.
pools, and maintenance costs,
Yep.
they buy, but then their borrowing power drops a bit because we would have estimated, say, $300 a month, thinking there's a bit of fat in there, but it's actually $450.
Yeah.
You can't borrow as much.
Yeah. Just another reason to steer clear of high density living.
Yes, this is true. And expensive body corporates.
Yeah.
How much, I would imagine that the landscape of lending to sort of PAYG and people that are in sort of 9-to-5 corporate
Yep.
world jobs, and then the, solo business owner, that sort of probably changed. You're seeing more of the solo business owner. Yes.
Yeah,
no,
yeah, a bit more entrepreneurialism, and also the person that is still working 9 to 5 but has a little side hustle.
Right.
Whether it be an
okay.
Amazon drop ship or I knit beanies and I sell them on Etsy or whatever it is, there can be a bit of extra money on the side. Yeah.
And how are banks reacting to that sort of change in consistent income? Like, because a lot of my friends are business owners and they're like, oh gosh, like, we're minimizing tax over here. So then how am I ever going to get a home loan?
Yeah, so there's 2 layers to it. When you're 9 to 5 PAYG, you're an employee, you're getting a standard income, it's pretty straightforward. And so, you earn what you earn, and it's not too much complicated to it. When you're a business owner or self-employed, whatever you want to term it, and you're earning money through an ABN, so you've got an ABN set up, the bank, it is pretty cut and dry. There's 2 layers. If you want to get a loan with the most reputable lenders at the cheapest rates, you will need to show at least 1 year worth of tax returns, but most of them will want 2 to show consistency. And so that really hurts you. If you want to go and start a business tomorrow, you might have to wait 18, 24 months before you can actually get a home loan. Also, on top of that, you think about if you start a business tomorrow, it might not go that well for the first while. So you might not be able to apply, like that year's tax return's not going to show great figures. Then you start, the business is flying now. Will I want to go get a loan? Okay, give me your most recent tax return. Oh, that was from 6 months ago. It doesn't look very good. Okay, we're going to have to wait. And so in the self-employed world, it's really about your tax return. The second layer, if you wanted to find a quicker solution, there are alternate lenders out there that will look at your BAS statements, which are quarterly statements that show how the business has been going, and they will lend off as few as 2 quarters of BAS. So 6 months, just your most recent 6 months. Show us that, we'll annualise it. That's what you earn.
Scary.
But you pay a higher rate.
Yeah.
There's a few fees attached to it. So it just depends what you want to do and what opportunity you're trying to chase.
Yeah.
There are solutions out there, and there's more of these alternate lender solutions coming to the market. Which is probably a reflection of a bit more entrepreneurialism out there. But traditional banking, your tax return is the truth.
Yeah.
Even if the tax return was from 8 months ago, that's all they'll rest on. So often you're kind of trying to time it when you're self-employed as to when you go for a loan.
Yeah. Do you sometimes find that it's best to work in with that person's accountant, or is it a team effort, or you sort of like get your ducks in a row and then come to me?
Yeah, it depends on the person. But, when we send them an email saying, great, send us your business financials, your transaction history, this, that, they go, oh, hold on, what are they? You go, if you're happy, introduce us to your accountant and we'll ask them directly for what you need.
Yeah.
And then, with the client's permission, the 2 professions can work together.
Oh, we talk about having the right team around you all the time, and I think that's a perfect example of just in life in general. Get like a good accountant, good finance person, money person, good financial planner, all that. Good doctor, good GP,
Good buyer's advocate.
good buyer's advocate.
Good cafe.
Good cafe.
Oh my God, this child over here drinking a hot chocolate.
I'll keep my lid on.
Who would have thought?
I know. How much does it say about someone? You text them, oh, do you want a coffee? We'll bring it into the studio. And they're like, hot chocolate, please.
Do you know what his
2 marshmallows.
No, his response was a hot chocolate. Yes, I'm a child.
I know
And I
it's
was
bad.
like, you beat me to it. I was going to say
I'm in
that.
the worst job because we're constantly talking to people.
Yeah.
I don't drink coffee and I don't drink beer.
Yeah.
It cuts me out of a lot of social situations where you just have to be awkward and explain. Coffee, I love the smell, sends me high as a kite.
I was going to say, at
Like,
least you're probably pretty even keeled through the
It
day.
sends me
Yeah.
high as a
We're
kite.
probably ebbing and flowing, like, because I drink so much coffee.
Oh, mate, I'm just on 1 these days.
Really?
Oh, yeah. 1 and done.
Pure soul over there.
Oh, I'm on like 4.
Oh, my God, Tabitha.
You don't act like that. You were once on 4. Oh my God, throwing stones in glass houses over there. Anyway,
when I used to work at a cafe
That's what did me.
every hour.
I used to go around. This owner had 4 cafes. I used to go around and test the machines and get the grind right for the day.
Yeah.
I'd have 7 coffees before 10, and then I just grew an aversion to it. I was like, I can't touch this
No.
stuff anymore.
Yeah, that would
It's
give you
not
a
healthy.
It
total
was so
aversion.
bad.
Yeah.
Yeah,
Anyway.
but hot chocolate, I mean, you can go a lemongrass. But anyway,
Yeah.
there's something.
So sometimes it's a peppermint tea.
I think that.
If we're at the cafe and it's got actually squeezed orange juice, that'd be the order.
Oh, okay.
yeah.
I hate it when it's out of the bottle. Like it's got to
yeah.
be
Yeah.
properly,
Pulp? No pulp?
like the pulp.
Oh,
I like,
Yeah.
whoa.
Yeah.
Oh,
Like
really?
the pulp.
I don't know.
No?
I could go smooth, OJ.
I just convinced myself all the health is in the pulp.
It is. That's the fibre.
Okay, good.
Don't get Sam started on what's good and bad for you because we'll be here all day. She's a health guru.
Okay.
But how much investor lending? We haven't spoken much about that. What are you seeing at the moment?
Yeah, be careful here because this is where the TikTok comments go bloody wild.
Yeah,
When
so
we
it's something
talk about
controversial, so they'll attack you in the comments.
It's like obviously we're in a rental housing crisis
Totally.
in Melbourne, full on rental housing crisis, and we think it's very much just the beginning. And there's probably going to be a bit of a longer term fallout from this.
Totally.
Tell us your thoughts. Are you getting loans for investors now?
In Victoria.
In Victoria.
Very rarely.
Very rarely.
Very rarely. And when I say very rarely, probably 5 out of 100. That's how rarely. That's how rarely. What I have done a fair few of recently is investors that wanted to buy in Queensland or Perth or WA, really the Perth area of WA.
Yeah.
So, and that's two things driving that. Growth cycle in Melbourne is apparently slowing down or not there at all. So for a pure investor that's chasing growth and return on their investment, they're not looking in the Melbourne market at the moment. You've got land taxes and other associated costs in Victoria that are higher than everywhere else. Stamp duty is a bit higher than everywhere else. All that kind of stuff that makes an investor, when they're purely looking at an Excel spreadsheet, go, no, that doesn't work. Let's go over here. And affordability. You can buy a 4 or 5 bedroom home in the Perth market, accessible to the city for $700,000.
Exactly.
Yeah, wow. So
exactly.
And we know that properties on land or family homes grow better than apartment blocks. You take $700,000 in the Melbourne market, you're getting a 2-bed apartment, in that inner ring of the city. There's many of them. It's probably not going to grow that well. So we are doing a few loans for investors in those markets. Very few Melbourne-based investors. We ran an investment workshop a few weeks ago. We had 5 enroll and 3 turn up.
Oh, shit.
When usually to our seminars we get 30 to 40 people. So it's just no appetite for it.
Yeah, well, when you do have someone, because we have this discussion all the time, if we have an investor come to us, wanting help in buying an investment property, I sort of make sure they really understand like what they're doing, what the goal is. Have you consulted your accountant, your fin planner? Because is it the right move for you right now?
Yeah, and that's a really good question.
Yeah.
Right?
Do you have those conversations with people, or you're like, oh, you want an investment loan? We're happy to help you.
Yeah, it's a difficult role, the mortgage broker, because we get so involved in someone's financial position, but we are only allowed to give advice on debt.
Yeah.
I have personal views, and that would be that if you've got say an investor has generally probably owned their home, they might still have debt on it, but they're looking to invest. If property's not for everyone, right? Like it's big cost, big outlays, terribly illiquid, and the cash flow to maintain it needs to remain consistent. Whereas if you alternatively went and took that money and put it into the share market, something you could drip feed in over time and bite off what you can chew at the time, and if it gets too much, you just pull out and you go back in. It's much more liquid investment. For me personally, that would be if you've got a home, to start diversifying and looking at other stuff. But to get advice around that, that's when it starts getting trickier, because you need a financial planner to set something out for you, or you have a go yourself, which there's plenty of advice out there sort of freely available. But yeah, I'm totally with you. Investing is not for everyone in property. Yeah. And a lot of the time it just doesn't make sense.
Yeah, right now. But then, hey, they might change the legislation tomorrow.
I was going to say that is the problem, is that it's an ever-changing landscape of what it looks like to be a property investor in the Melbourne market.
Totally.
And it's like, if there's no consistency, how can people make long-term plans? I mean, property is, a 7-year plus plan. And if you don't have consistency over that, why would you take the risk?
Completely agree. Yeah, you're putting your money towards something that you can't. You have very limited control over what it's going to look like. I would be interested, say they did do something radical, like get rid of negative gearing or something like that. Whether they said from X date we're going to get rid of this, would that cause a rush of investor buyers to get in? And then on the flip side, after that date, will there be a rush of people just selling?
Yeah, exactly.
It would be interesting to see the effect on the property market.
Yeah.
But we do know most of the market is an owner-occupied market.
Yeah.
So most homes are owner occupied, not investment. So it would move the market in some direction somehow, but it wouldn't be an astronomical change to where we sit at the moment.
Yeah.
Yeah, we should get a financial planner on because I think it's like interesting discussion to have sort of everyone.
Totally. Yeah.
Everyone's thoughts about it.
Yeah.
Yeah.
So with my mortgage, I've got an offset account.
Yes.
But is it always a good idea? Is it not always a good idea? Is like when you take out a loan, they always come with offset
Yep.
accounts? What's the go?
Such a passionate topic.
Really?
Yeah.
Okay.
I always say to clients that when they hear anyone that doesn't have a home loan, they hear about these offset accounts.
Yeah.
And they go, what is this mysterious thing? It's people have a mortgage and they have this thing and it just does stuff for them.
Yeah.
Forget about it. It's a savings account.
Yeah.
The only difference is it's linked to your home loan, so it offsets your loan balance. So let's say I have a $500,000 loan, but I have $50,000 in my savings account, my offset account. That would mean the bank's calculating interest on a $450,000 loan. So effectively that $50,000 is offsetting my home loan balance and giving me a charge of less interest than what I'd otherwise incur. Are they worth it? Should I have one? Generally speaking, when you get a home loan account that has the feature of an offset account, it comes with an annual fee. That annual fee is anywhere from $300 to $400, depending on lender, which means at current interest rates, we need about $5,000 to $7,000 in savings to save enough to pay for the annual fee, if that makes sense, right?
Yeah.
So my answer to most people is, if you think you will have $10,000 or more in an offset account over the next 5 to 7 years on average, and a lot of people think they buy a house and hopefully they can build up their offset, we should definitely have an offset account. 100%. Yeah, all the time. So statistically, in a year, if I did 2 loans that didn't have an offset account, I'd be surprised.
Yeah.
Yeah, so pretty much everyone gets one.
But the reason why you wouldn't use that $10,000 in your offset account to just pay down the loan,
so it's about
is because accessibility to the money.
So it's money that's sitting there. So we're Australians. We all try and tinker with our homes and renovate, and we all think we're on the block and do our thing. So everyone just wants to have a bit of accessible cash for home renos, car upgrades, school fees. Financial buffer for the household, just to have a
little mojo account as a barefoot investor.
Safety net, right?
Yeah.
So, and I would argue if you're getting a mortgage, you don't want to be living, repayment to repayment. So it shouldn't be paycheck comes in, goes to mortgage. Yes, I've got $1,000 left over until the next paycheck. Hopefully, once you're buying a property, you're financially stable enough to be able to pay your mortgage and try and build up that offset a little bit as well. And that's where I use that $10,000 figure to say if you've got that or more, then you should be using an offset account. The benefit of paying down the loan is that you can take, say your offset builds up a bit, you get to 40,000, you go, well, I only want this to be 10, take 30 grand, pay it off the home loan, reduce your monthly repayments.
Yeah.
But that money's committed. We can't then knock on the bank's door and say, oh, can I just get that 30 back up? The car broke down.
I actually,
Yeah. So
changed my mind.
It's that balance of having money available to you whilst it's still lowering your mortgage costs.
Yeah.
Versus committing the money and saying goodbye.
Very interesting. I feel like we've come to that time. Do you know what my last question is? I want to know, what is your favourite part about your job?
Wow.
That wasn't on the question list, but I like it. There was
I got 2 answers.
Go on.
Probably one's client facing, one's business orientated.
Perfect.
So the client that comes to you with big possum eyes going, I want to buy a house, but what do I do?
Yeah.
And then 3, 4, 5, 6 months later, they've bought a house, they've got the keys and they're making their repayments and everything's great. It's just, you literally are the only person in the whole experience that's there from what I call the possum eyes moment of what are we doing to, hey, you've got your keys and now let's do an annual review every year to just check in it's all okay.
Yeah.
A conveyancer comes in along the road, a real estate agent comes in along the road, the building inspection, these people come in and we hold their hand through all that. But to be able to be there start to finish, that's the coolest bit.
You forgot the most important person.
Satisfying.
Buyers advocates
Obviously.
are also there. Start
But
to finish.
but that's true that you're there. You're there
From
well
start,
beyond us.
well before
we
us.
keep
well
going,
before and
right?
well beyond. Yeah.
So we yesterday I did a 7-year annual review for a client.
Yeah,
right?
wow.
That's pretty cool.
Yeah.
Right? And so you build these really good relationships and get to see their financial journey over the time.
Yeah.
The other side of, I guess, what I do, I've got a couple of really great mortgage brokers in my business, and then they start as under a mentor program. So you mentor them, kind of like apprenticeships, and you sort of grow their knowledge and skill, and they're now doing equally great things for their clients, and that gives me a lot of satisfaction.
Yeah, nice.
Warm fuzzies.
Warm fuzzies. And you're only on year 8. Imagine on year 18.
Imagine
Do you think you
all.
might have another set of twins maybe by then?
No.
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 Yeah.
Well, 2 and done.
2 and done.
Yeah,
I think so.
I mean, yeah.
Yeah.
Now you got to fill that big house of yours.
Yeah, I don't think with any more kids. Let's go to dogs
Animals?
now. Yeah,
Go
let's
to
go
dogs,
to dogs.
get a pool table,
Yeah.
table tennis court. No, what is the new game they play?
Pickleball.
Pickleball.
Yeah, pickleball. No, we won't be having pickleball.
All right. Love
Go
your
for it,
work,
girl.
Will.
Thank you.
Are we going to do, we've got to do F, marry, kill.
Oh, okay.
Our
Okay.
favourite
Yeah.
little segment. You're in the hot seat. We
You
don't
are
need
in the
to.
hot
We're
seat.
not going to answer, but it's all for you.
Okay.
Yeah, okay, F, marry, kill.
Yes.
So obviously you've listened to our podcast and
Yes.
you know exactly what this
Yes.
little segment
Yeah,
is.
but I'm still worried about it. But yeah.
Oh, it's so straightforward. I know exactly what you'll say. Combank, Judo, Bank of Australia.
So which one are you effing, which one are you killing, and which one are you marrying?
You could get me cancelled here.
I love that.
I didn't even think about that.
Combank, Judo, and Bank Australia.
Yeah.
Um.
For a 30-year home loan.
Yeah. Okay. I need to ask
Yeah.
the context, right?
Yeah.
Oh God, don't get in the
So
minutia.
you're a straightforward.
Yeah. I'm trying to get a home loan.
You're trying to get a home loan.
Okay,
You're very
great.
straightforward. You're going to get a 30-year loan. Let's
Yep.
call it $1 million loan.
Yep. I'll marry Bank Australia.
Oh.
I like them because they've do ethical investing or something.
They
Right.
do
Rain on
ethical
it.
lending, and that's where they've positioned themselves in
Right.
the market. And so when I think about marriage, I
Yeah.
want to be with someone that's got the right qualities and values that I could live with for a lifetime. That's where Bank Australia sits, right? Is their interest rate always the cheapest? No, but they're a great bank,
Got
They're
good
a high
values.
quality,
High
long
quality
term,
values.
good, strong values.
right? I think that's a good way
man
to
that likes
answer it.
commitment. That's great.
I
Keep
love that
going.
answer.
Now what is the next two?
I'm now I put my business owner hat on. I don't think you can kill CBA.
I agree.
They're just too big a beast.
The OGs.
Yeah, they've been around forever.
You got to keep them as a side piece.
We don't do a great deal of business with them because we tend to find there's cheaper solutions elsewhere.
Yeah.
But when we need them, they're great and they've got a really good offering. And as much as we pay out on our big lenders, they're huge portions of people's super funds and they make really good returns and growth for the long term. So I think CBA stays about and a lot of our financial system they're involved in.
Yeah.
So they've got to stay,
Yeah.
which means I'm killing Judo
Judo.
Bank,
Judo.
who have only been around for a shorter time
Yeah.
than both them.
Yeah.
And they're doing awesome things, but they're killed.
Yeah. They're gone.
Scrapped.
They're out.
Yeah.
Well,
Love
we've
it.
loved having you. I hope it's not been too painful and
Been
you've,
awesome.
you've enjoyed it. Will from 40/40 Finance.
40/40 Finance.
Blow his phone up if you need a home loan. And hopefully we've got loads more questions, so maybe we'll get you back.
Would love it. Thanks, girls. Thanks for having me.
Thanks, Will.